Well, good afternoon, everybody. Well, seen from here, indeed, that's a lot of familiar faces, and it really looks like a family event. So good to see you all. And I think maybe we can make this a little bit less formal, right? So, here comes the inevitable panel, I think, on SMEs. Let's be honest, after, a number of decades where policymakers were only concerned with large businesses, national champions, I think now it's absolutely inevitable to talk about SMEs. And that's a good thing. I think that's a very good thing. And I think, in these days where a lot of people spend time bashing the European Commission, I think we can pay tribute for really having helped putting SMEs on the forefront of the agenda. So I think that's really well done. Maybe perhaps without that, we would still see a number of member states continuing to subsidize large, declining industries. So I think that's a very good move. And I suppose the CMU, the Capital Markets Union, is also the continuation of this agenda and a very important one for the continent. So let's hope that this agenda continues being sustained until, beyond the end of this commission, I should say. Now, having said that, I personally think that, however, large businesses are also important. And I always think about the statistics that I'm sure you've all seen because it sits on the European Commission websites, for instance, saying that in Europe, 99% of businesses are SMEs. And it says that these 99% actually provide for 2/3 of the employment in the private sector. That's very good. But what it also tells me is that perhaps 1% of businesses are actually contributing 33% of employment in the private sector. And that's not too bad, I think. That's really not too bad. And we should also think about that. And we should also turn our heads and not be inward-looking, I think, in the EU, but look on the other side of the Atlantic. And if you look out there, well, their large businesses are very young. A couple of decades ago, very often, there were small SMEs. So I suppose the agenda that we should be looking at, what is, to my view, the central question, is how we can help SMEs develop and provide sustainable wealth and jobs. And by the way, I voluntarily didn't use the word growth, which I personally think is a concept of the past. So I think it's a good thing, finally, that the old continent is looking at small and medium-sized entities. Today, we're going to focus on listed entities. I think SMEs are such a diverse group that we need to narrow down the focus a little bit. And it's great to see greater attention, I think, on startups. And it's good to see the level of attention from policymakers is increasing. That's well deserved. However, sometimes I wonder whether we have the same increase in the entrepreneurship climate on the continent and the same increase on the level of access to finance. So again, that's all the development agenda, and that's what we should be talking about. Because as the first panel said, and I think both Hans and Eric made the point, accounting and accountants have a critical role to play on this development agenda. So that's, I think, a very important question that we need to discuss today. And to discuss this question, I think we have an outstanding panel that I would like to very briefly introduce, because if you want to read the details of their impressive CVs, it's all in your pack. So first, ladies, I think I would like to welcome Valérie Quinan, who is here with us today. Valérie is actually a partner with Clearfield Benelux, a corporate finance firm that is especially focused on the SME market. And Valérie is also lecturing in a number of business schools. She's not going to be lecturing today because I'll be the watchman, if I may, Andrew, today. So I'm very pleased to continue welcoming Michel Prada. I really don't think Michel needs to be introduced, but just in case, he is the chairman of the IFRS Foundation. Thank you very much for being with us, Michel. Do I need to introduce also Andrew? I think you've been introduced 3 or 4 times already today, right? So that's probably enough. Good. Now I'd like to introduce Roger Marshall. Roger is an EFRAG board member and, well, the former acting president. You've been already praised a number of times today, and very rightly so, for the great job that I think you've done during this period. And finally, I would like to introduce the man who introduced himself earlier today, Peter Malmquist. Did I get your name right, Peter?
Yeah.
I'll call you Peter, okay? Good. So Peter is actually the chairman of the Swedish Society of Financial Analysts. He's also the co-chair of the ISB Capital Markets Advisory Committee and a member of the EFRAG user panel. Did I forget anything?
A lot.
Okay, so as I forgot things, please look at your packs and you'll have all the CVs of this fantastic panel to discuss this issue today. However, before we start, I would really like to continue the tradition of asking a question to you, the audience. And it's going to be, well, it's going to be difficult because it's going to be one of these simple questions on a very complex matter. But however, we'll give it a try, okay? And the simple question, well, you can see it on screen, is should smaller listed companies apply simplified financial reporting standards compared to larger ones, i.e. not full IFRS? Simple question on a very complex matter, and we know the kind of results that these questions can produce. So don't worry, you will have a second chance to vote. After you have the explanations of the panel, okay, we will see the difference between maybe a not so informed vote and a vote after having benefited from the explanations of experts. And of course, that is not a reference to anything that happened recently. Yeah? So can we have the results now? Did you vote? All right, so please take your machines and vote. You can press A or B, 1 or 2, and we'll see what the results are. Okay, so panel, you know what the challenge is now, all right? Very good. So 60%, I'm going to make a note of that. I think you should stay here, Michel. No, please, please. Very good. Well, can I perhaps ask another question? And I'm sorry this was not in the scenario. So we're going to use a new technology which is called show of hands. It's something that we've used for a number of centuries already. And this time it's a complex question, but on a simple matter. And the question is, who amongst you have been the owner, the manager, or the employee of an SME? Please raise your hands. Okay, well, all those who have raised your hands, you start thinking about the question you're going to ask the panel. And I'm delighted that we had 2 hands raised on the panel. We can have a really informed discussion, and I'm sure we're going to start. We have 2.5 hands, sorry. I'm very bad at counting, although I've been the CEO of the Federation of European Accountants. But we're going to start now with the fundamental question, I think. And the fundamental question is, well, how important do you think it is, how important do you think it is financial statements for smaller entities? And this question, well, you know, Valerie, you raised your hands, and you're the only female on the panel, so I would like to ask you the question first. How important are financial statements for smaller companies?
Thank you, Olivier. Thank you. Thank you for your invitation also, and thank you. I'm very happy to open this discussion on a very interesting topic. As you see, I don't have the same profile as my colleagues in the panel, and that have nothing to do with the length of my hair or of my dress, nothing to do. But I've been working for now 23 years in the financial sector, IPO and mergers and acquisition, and only with small and medium-sized enterprises. So I think that the reason why I'm here today, because I'm not a chairman of something, I'm not a specialist of IFRS, but I work with small and medium-sized enterprises. So everything I will tell you has something to do with my experience with small and medium-sized enterprises. So, because I'm a professor, also professor of finance, I will structure what I will tell you because it makes part of my of the way I speak. So I will develop today, I will talk about the size of the company, about the alternative sources of information, and also the difficulty to prepare cash flow projections without transparent and comparable financial statements. It's a great challenge for us to prepare cash flow statements or business plans without comparable information. And if we have more time, I will talk about the access to the capital for small and medium-sized enterprises, and of course the link with the subject of today, and then also the link between the efficiency of the investments and the quality of the financial statements.
And
so
the good news is that I have plenty of questions, so I'm
yes.
sure you'll have
yes.
the opportunity to come back
but
to
I will
that.
not talk during 15 minutes. Don't
Very
be
good.
afraid. Don't be
So
afraid.
I'm going to ask you, all the panelists to have short answers. So.
But first question, so the size, first point, the size of the company. I don't think that the size of the company is the right and only way to determine the right accounting framework. I've read recently that 9 billion euro were raised by small and medium-sized enterprises on Euronext markets in 2014, and I think that it's enough to pay attention to this type of company and to eventual common rules, accounting rules for this type of company. 9 billion euro in 2014, it's the figure I found. So I would like to talk about the alternative sources of information. My opinion is that financial statements are very important for investors in small listed companies because they have few alternative sources of information. So if we don't have financial statements, I can tell you that it's a nightmare for us to work with small and medium-sized enterprises. The small, but mostly the very small companies listed on non-regulated markets. I think we will talk about non-regulated markets a little bit later.
Both, yeah.
But I think about the free market, for example. I don't know if you know this market. If you don't know it, feel free to ask questions. These companies are too small to be followed by financial analysts because the free float is too low, and the reports of the financial analysts would not interest enough people. So can you imagine, once again, if we work with small and medium-sized enterprises, we don't have reports of financial analysts, so we don't have a lot of alternative sources of information. I've been working for more than 7 years in the IPO sector, and I can tell you that it's really a nightmare to write a prospectus and to get it approved by the market authority, because the small companies most of the time don't even have written information about the operations of the company, about the business process of the company. So can you imagine when we have to make a business plan in such a company? We have nothing on paper. We have to write a business plan based on assumptions, and the assumptions, we don't have the assumptions on paper, so we have to discuss with the management of the company. So it's really a nightmare to write a prospectus for an IPO and to get it approved by the market authority, because the market authority asks a lot of questions to be sure that we protect the final investor, of course. So it's a point. Do you want to intervene? No, can I go further?
Please.
Please, tell me. I have enough to tell you. So, and another point is about the major problem for the small and medium-sized enterprises is the access to the capital market, the access to fresh capital. So I think that it's an argument in favor of correct, transparent financial statement with common rules, please, because it's so difficult to compare companies if the rules are not common. And one last point, and afterwards I will stop. I also think that there is a link between between correct and transparent financial statement and the efficiency of an investment, for example. It's perhaps a strange link, but I think that it affects positively the efficiency of an investment. I'm now active in the mergers and acquisition sector, and for more than 15 years, and I noticed that the quality of financial statement improved the quality of the forecasted cash flows, of course, and also the quality, the efficiency, of the future investment. And so, last sentence, I promise. I don't need accounts in full IFRS. I don't need in full IFRS, but I really need transparent financial statement with common rules.
Okay, thank you very much, Valérie.
Thank you.
I think you've answered all the questions I had.
Perfect.
But no, I'll come back. You'll have the floor again anyway.
Thank you.
Maybe I could ask Andrew actually to comment on that. And I don't know whether we want to talk about the issue of how you define SMEs and whether size is so important. I know Peter is burning to have comments on that, but especially today with the impact of technology, I think things like size and borders matter less and less to my views. Maybe that's something we want to comment, but Andrew first.
Yeah, thanks, Olivier. Actually, I should have put my hand up to the question, have you ever worked for an SME? Because I think on the European size thresholds for a small company, EFRAG, of which I am an employee, actually meets the conditions on number of employees, balance sheet total, and revenue. So there we are. We're also very enterprising. But actually, just to lay out my credentials as someone who hasn't spent most of his career working for an SME, as global head of a former accounting firm, it was one of the accounting firms outside the Big Four, where in fact the UK practice, over a certain period at least, was by number the largest auditor of companies listed on the UK's AIM market, alternative investment market, which is one of the non-regulated European markets that's actually made IFRS mandatory through its own decisions, through its own listing rules, not through European regulation, I'd hasten to add. So I think that role gave me quite a lot of insight into certainly IFRS for smaller listed companies, and most of them are smaller, some of the challenges, but that's a question I think we're possibly coming on to later. But what I would say is that among AIM companies and financial management of those companies, there was certainly a perception that actually the financial statements are not all that important, and something of a compliance exercise over and above a communication exercise, and that investors, their users of their financial statements, weren't really paying much attention to these financial statements. It's interesting to speculate on why that perception prevails, which rather leads me on to my next point, that I think the evidence suggests actually that financial statements to AIM markets and smaller quoted companies more generally are extremely important. And I don't want to steal Roger's thunder. I think Roger might want to talk about the FRC's work in this space, but the FRC has done some work looking at really improving the quality of financial reporting by smaller listed companies with up to a UK focus, and I think part of that was an investor survey, and well over 80% of investors in such companies said the financial statements are very important, and something like nearly 30% said it's their financial statements are their primary source of information for decision-making purposes. So possibly the reason for the perception that actually investors aren't paying much attention, it does seem to be a false perception, is that there is just less dialogue between investors and smaller quoted companies than there is between investors and larger quoted companies. But we actually set up these questions thinking we're going to have panelists sort of disagree with each other if they're asking the same question. But I fully agree with Valérie that, of course, so financial statements are extremely important, and partly because despite talk of us living in a sort of age of information abundance, or information superabundance if you prefer, actually when it comes to information to help you make a decision about investing in a smaller quoted company, there's not a whole lot out there. There isn't a lot of analyst research, isn't a lot of media coverage. So investors are, if you like it or not, forced to place heavy reliance on financial statements because that's what they've got. Mm-hmm. I also think the comparative advantage of financial statements over other forms of information and other forms of reporting that are available, the comparative advantage is probably even stronger in this part of the market, this part of the quoted market, because if you're talking about perhaps a newer, less well-established business, then the additional value attached to the reliability of financial statements, that the fact that they comply with standards, that they're audited, is even greater than for the big end of town. So overall, I think they're not just very important, but absolutely essential.
Thank you very much, Andrew. Well, I think we will have disagreement anyway with the audience, if I remember the vote, so we'll come back to that at the end of the session. You mentioned the FRC study. Maybe Roger wants to comment further on this study?
Not for very long, but the FRC did quite a big study into why do small listed companies make more mistakes in their financial statements than large companies. And one of the things we were looking at is, are they important to investors? And to repeat what Valerie and Andrew have both said, they are actually the only source of information. There aren't a lot of analysts covering these small companies. And investors told us that they couldn't find the information they were looking for in the financial statements. They just wouldn't invest. I'm not quite sure that a lot of small companies know that. But we can perhaps come on to this later. Investors look at financial statements of small companies, probably looking for slightly different information. For small growth companies, they're not using the income statement as a means of forecasting future financial performance. They're looking more at the products, the business model for that. But they're very interested in cash flow, so the cash flow statement is very important. They're looking at things like accounting policies, revenue recognition. They're looking at related party transactions. So there's a number of specific areas that they're really focused on in small financial statements, small company financial statements, that perhaps they're not so focused on in larger companies.
So you've made the case, I think, the three of you, that it is very important. I'd love to be able to ask the question again now, but maybe we can move on. And Peter, I know you want to comment on that, but you'll actually comment on that end of the next question. The next question being, well, you know, considering that financial statements are maybe even more important for SMEs, at least that's the view that the three other panelists have held, what is most important for users, actually? And I think that's really a question for you, Peter.
Yeah, I agree with all the others, so I don't disagree. But what is most important? Well, if you look how I analyze a large company, however we define it, a multinational company, the first thing is that I try to break it down into smaller pieces, into a small companies. Then, of course, the divisions or the segments become still very large companies, but that is the starting point. When I have a small company, I'm talking about on the Stockholm Exchange companies that are around probably 300-400 out of 600. They are normally very focused. So I don't need to break them down into that many segments, maybe one or two. One problem in this case is that I don't get segment information enough. So a small company is normally a mix of different products. But a lot of companies are also very focused. Now, if they are a mix of products, I'm trying to dig in to understand what is actually driving earnings, cash flows, revenue in the company, which are the products that are most important, which are the customers or the areas which that are most important. And then, of course, because they are so focused, they are also very risky. If you have like one product group that has 75% of the total business, then of course those customers becomes very important, those products becomes very important. So I'm more risk-oriented when I look at a small company. But I'm also definitely, the reason I'm digging into a small company is that I hopefully will find superior growth. So the future market for the products, whether they can acquire companies, is one factor. So it's very revenue oriented when you look at a small company. The growth potential is, being a sell-side analyst, what I can sell the share on to a buy-side analyst, so to speak. So it's more growth oriented, it's more focused on the revenue, but it's also focused on kind of operating risk in the business. Each individual, there might be some key persons in the company that are extremely important and so on. But I definitely started the figures are important, the trends are important in the kind of small companies that have trends. Not all have trends either.
So you're kind of implying that in terms of users' need, the information that you need is slightly different.
It's not, I mean, of course, I want the same kind of information for a large company, but the large company is a group of stuff. a group of products. And normally I can get information from macroeconomic statistics, from societies, associations that are connected to the kind of like pharmaceutical or trucks or whatever I'm looking at. If I have a small company, I cannot get that kind of complementary information, so I need to focus more on the company and the prospects for the products or services.
I think, Valerie, in your initial comments, you hinted to that same idea. How do you see the importance of users' needs? Are they different from what is needed on large companies?
Different, it depends. In fact, I would like to talk about the different users of this information, because you have the lenders, you have the customers and the suppliers, you have the investors, of course, the family owners for small companies, and they don't need the same information. But let's talk about the bank, for example, the banks. When a bank will grant a loan, it will be based on historical information, of course, not on future cash flows, because the bank, can I say, is not paid enough with a low interest rate. The bank is not paid enough to bear the risk of the investment of the project. So it's totally normal that the bank will base its decision on historical cash flows, to be sure that the company has enough cash flows today to be able to repay the bank loan. So the banks need, you are talking about the different users of financial information, the banks need cash flows, because cash is king, as we say in finance, need cash flow, and cash flow must also be based on correct and comparable financial statements, of course, on historical financial statements. Now for the investors will look at future cash flows, of course, but the future cash flows are also based on the history of the company and the future project and the assumptions behind this future project, the assumptions of this project. So it really depends on the users, but I think that all of them need correct, transparent, and cash flow statements, financial statements, and with common rules. And once again, I repeat it, with common rules. It's really crazy to compare companies. When we value companies with the ratios, for example, when we have to compare the target company with listed companies, if there is nothing comparable, it's totally crazy. It's nonsense, our evaluation. So it's sometimes very difficult, and it's very difficult to value small size companies, really.
So lots of heads nodding and quite a high level of consensus in this panel, which is good. But maybe it's going to start with the next question, because I think if we look at, one of the critical questions we always ask ourselves in the EU is, what is the level of harmonization that is needed? Now, if we look specifically at non-regulated markets, I think on most non-regulated markets, it is allowed or even required to use local gaps. And with the opening and further integration of markets and the stated objectives of the CMU, I think we can legitimately again revisit the question of harmonization. So I'd very much like to have your views on the panel, and maybe I'm going to start with Roger, who as a national standard setter, I think it's going to be especially interesting to have your view on that question. Is harmonization needed on these non-regulated markets?
Well, I'm not sure that harmonisation is required, but I certainly think it should be allowed. I'm an investor in startup companies in a very small way, and I went to a fintech investor conference the other day. There were 6 companies presenting, and they were for 6 different countries in the EU. Now, and they're presenting to in that case, in one capital market. So I think it's very important that they at least be allowed to present information in a common way. Whether they should be required is another matter entirely, because you're then into, if they're not looking for capital anywhere else, should they be made to do that? But I certainly think they should be allowed to.
So helpful, but not to be required.
Yeah.
And from a user's perspective, Peter, what do you think?
As a default option, I'm in favor of IFRS for all listed companies, regulated and non-regulated. Okay, so that's the default option. Now, what I have in Sweden is approximately 500 listed companies. 300 are regulated, complying with IFRS. 200 are not regulated. Approximately 2/3 of them still complies with IFRS. 1/3 doesn't. Is that a big problem? Well, if you look from a market value perspective, they means absolutely nothing, the rest of them. If I dig into the numbers, well, I would love to have IFRS also in those companies, but do I want to invest in them just because they have IFRS accounting? No, there are several other problems, like tremendous losses is one, and so on. So just having IFRS for smaller companies is not a solution for the companies to go into a market and requiring money. Now, if I take it the other way around, what we have also in what we use in the Swedish market is local GAAP, very similar to the SME standard, okay, but with some local adjustments. Now, that means that you have goodwill amortizations, and that's a very effective poison pill, actually, because when a company acquires another for the first time, they experience that they need to do goodwill amortizations, and the others don't. So they will fairly rapidly switch to IFRS just because of that. And that is the normal trend. And then they go on forward to the regulated market. So yes, as a default option, I would love to have IFRS on all companies. So consequently, harmonization all over Europe. But is it a big problem? No, not really. So I wouldn't legislate on it. A very important question is also, what is a small company that you started with?
Yeah.
Yes, I wanted to.
Valerie, please go ahead.
Yes.
Comment on what is a small company.
I wanted to
really longing for the answer.
not really comment the size of the company, but it depends on the country, of course. A small company in this country is sometimes very, very small. So I don't know, once again, if you know the free market, the market for very, very small companies. There are no admission rules on this market, so you have very, very small IPOs. And it's very difficult to imagine that we will ask these companies to comply with IFRS because, as I told you, they even don't have written information about the operations of the company, and you will ask them to translate the accounts in IFRS. They don't know what it means.
Okay. As you said, very small.
From a small company perspective, what is the problem with IFRS? I mean, the difficult parts are like IAS 39, financial instruments, or IFRS 9, if we like to call it that. Pensions, revaluations of real estate, if you're an investment property company. I mean, if you're not into having pension liabilities, which they normally don't in Sweden, in your balance sheet, then it's no big deal to me. The most problematic area is revenue recognition, because the business model that I come across, as you mentioned previously, what is your business model? Well, we try to sell to customers.
Yeah.
How?
No,
well, sometimes we pay and then they give us money and it comes back and forth. So that part is extremely crucial. So I think the IFRS 15 will be a big challenge for a lot of small companies, and that will educate them in actually doing businesses.
As we start talking about the challenges with IFRS, can we perhaps ask the opinion of the chairman of the IFRS Foundation? What are the challenges for SMEs to cope with IFRS?
Well, let me start by an anecdote and a general remark. The anecdote is that as I am an old man, fairly old man, I issued a number of reports in my career for different reasons. Most of them had proposals. Some of them were implemented, others were not. There is only one report where I failed, and that was in the late 80s, where, as I chaired a financial institution that was meant to finance SMEs, short-term, medium-term, long-term equity, I was asked to propose simplified accounting standards for SMEs, and I was not able to do it.
Yeah.
I worked very hard to meet the needs of the political masters that were expecting that I would find the philosophical stone, as we call it, and I couldn't. So this is the anecdote, and I've always thought that this is not really a truly well presented question. The second remark is that when we talk about these things, what do we have in mind, really? I think we should be a little more granular. I think we should think about accounting standards and principles, bookkeeping, financial reporting, and non-financial reporting. And then, to answer the complex question you asked earlier, you might have different answers on the four
On each
one.
of them, yeah.
And I truly believe that there is no merit in trying to simplify accounting standards, bookkeeping. Financial reporting is a question you could look into, and certainly non-financial disclosure. So from the point of view of the SMEs, my view is clearly that we do not need to have specific standards or bookkeeping rules for SMEs. And I'm truly on the side of those people who believe that the true divide really is not between big companies or SMEs. The true divide is, on the one hand, between complex business models, simple business models, and publicly accountable companies or non-publicly accountable companies. And then you can work in a better way, in a more practical and operational way. The difficulty with the second one, which is the difference between listed and non-listed, is that, of course, there is a grouping of companies that might become listed. And what you said was very obvious. When private equity funds look into companies that they would like to invest in, they are already thinking about the way they will get listed. And then they usually use accounting standards that are fit for listing. And of course, the best ones are IFRS.
Yeah.
So I do believe that this question in the EU should be sorted out very simply, using a harmonized system throughout Europe, and considering that for listed companies, there is no difference between regulated or non-regulated venues. The only relevant approach is to have similar accounting standards for the sake of comparability, transparency, efficiency, information of investors, which is the rule of the game.
Yeah. So very strong views actually from the panel on the usefulness of harmonization, on the applicability of IFRS across the board in reality. And I must confess I have the lights in my eyes, so I can't see whether there are any reactions from the audience. Any reactions from the audience on harmonization and the appropriateness of IFRS for all companies listed, regulated or non-regulated markets? And you'll really have to make a little bit of noise if you want to comment, because I can't see you, at least on this side.
Well, over there.
Two questions.
I would never invest in a SME based on IFRS reporting. That's for sure.
That's for sure.
And I would not entrust a CEO of a company that devotes money on the subject. I want something that gives me cash information. That is for sure. I want to know his business model. I want to know his operating risks. That is what I need. Not IFRS figures on expectations of what may happen in the future. So again, I don't understand the discussion at the moment, because this is not the way people will invest in the company.
It would be helpful to know where you're coming from, sorry, and I should have asked that for anyone commenting and taking the floor.
Well, I've invested once in a small company, and I know the subject
Yes,
was
I'm
not
aware.
at all about IFRS reporting,
Yes.
not at all.
What about valuation?
I've seen hands raised on the panel.
Yeah.
Do you want to comment on that statement rather than question? Yes, Peter and Michel.
Well, basically, I want both. Why can't
Both.
I? I mean, one is figure, historical patterns and stuff. The rest is a discussion, dig into the company, discuss estimates and projections and likely outcomes. So I cannot see how they are not kind of working together.
They're
The
not
key
exclusive.
question is, do I want full IFRS or do I want something else?
Yeah.
Because we want some kind of figures if we invest in a company, not only a discussion with the management.
Michel?
Well, I do not really understand this position because I think we should go deeper into the analysis. I don't deny that accounting does not provide all the information needed to make a relevant decision. But I think it's extremely difficult to imagine that you make a relevant decision without a relevant reporting and accounting. So I don't think a contradiction in it. And when you seem to present IFRS as merely a projection, I'm afraid I'm not a skilled accountant, and Hans would probably better comment on that than me, but I just don't think it is true. I mean, IFRS are fundamentally based on historic cost for a significant part of the measurement, and of course, in some cases, which are very well identified, they use fair value, and fair value is either market value or models, but that doesn't mean that IFRS is a projection. Doesn't make sense. I mean, it is absolutely untrue. You may have differences between national standards on some points, quite often, by the way, influenced by tax issues, which is a big chunk in the question. But I don't buy the idea that IFRS are merely a model for projection. I think it is simply not true.
I think, well, everybody wants to comment on this one. So Roger first.
I think we're back to what does small mean? Now, I talked about this FRC study before. We asked users, would you rather have IFRS? Would you rather use UK GAAP, which is based on IFRS for SMEs? And unanimously, the users said we like full IFRS. So it's clear what the users want. But you do have to feel some sympathy for the preparers. You might have a one bookkeeper and a part-time finance director or whatever. IFRS, is a very robust accounting framework, but it's complicated. It runs for 3,000 pages. Hans can probably tell me. IFRS for SMEs runs to 200 pages. So you're really into the art of the practical. I can see why all users want IFRS because it's the Rolls-Royce of accounting frameworks. But actually, going back to, would you want to invest in a new startup which have managed to actually get its financial statements onto IFRS? That's a different question. Are they actually focusing on the right thing? So I think it's a complicated question, and I can understand why a medium-sized listed company or even non-listed company should be expected to do full IFRS. I'm not sure whether it's a bridge too far for startups.
Yes, Michel,
No,
you're
I'll
burning
just-
to answer as well.
Yes, I'll just would like to react on this one because it's a very difficult and complex one. Of course, the book I have on my desk, and there are several of them, the green, the blue, the red, are not really the kind of thing I read every day, and only when I have difficulties to go to sleep. So I would recognize that if you put these books on the desk of the boss of an SME, he will be afraid. Now, I raised half of my hand when you asked whether I had worked for an SME. We use IFRS at the IFRS Foundation. 140 people altogether, a very simple business model, mainly wages, transportation, a few rents and that sort of thing. And it's very simple. Now, the difficulty is that you do not naturally extract the simplicity of the message out of the book. So maybe there is a communication issue, maybe there is an education issue, but if you go to Korea today, Korea has adopted IFRS in full for all companies. They have had some difficulties initially because they moved from very different standards, but they managed. And probably we need to look into this from a very practical point of view. But from a theoretical point of view, from a conceptual point of view, I see absolutely no reason why we should not consider that IFRS should be the same for listed, non-listed, for listed companies and accountable companies. And the issue of the complexity goes with the complexity of the business model, and that's it.
Right. So the principal answer is in
You were talking
proportionality.
about revenue recognition, and it happens that years ago, I will not mention the name of the company, but I was a securities regulator, and we had to sanction a company that was precisely not dealing with revenue recognition properly. That was before we had the revenue recognition standard. And these guys, I had piled on a host of liabilities through different arrangements. They believed it was good commercial policy, but they had absolutely not measured what were the risks. And had they implemented IFRS as today, they wouldn't have this difficulty clearly. So that is the main answer to me. Can I make a brief comment on complexity? Because this is, I'm not sure of what I'm going to say. But I wonder, no, it is a question for the future.
Right.
I wonder whether these issues will not be dealt with through digitalization.
That's, yes.
And I wonder whether we will not find tools that will help deal with the complexities in a different way.
I'll pick up on that point. I completely agree with Michel on that point. Actually, in my former organisation, which doesn't tend to audit the major banks, when we decided some guidance was needed on IFRS 9, rather than go into all of the intricacies of explaining how you apply an expected loss model to dynamic loan portfolios, we decided to produce one of our publications, a guide that said, actually, if your financial assets are primarily cash and trade receivables and maybe a loan to an associate, simple stuff, then this is what you need to know. And that was done in a sort of old paper-based way by reading through the standard and extracting with lots of caveats and cautionary statements what we thought you had to focus on. But you can very easily imagine some expert system, artificial intelligence, where you could sort of provide some filtering inputs to the nature of your business, and it would then tell you, well, these are the bits of the standards of the green or blue book, red book that actually apply to you. I think that's the technological capacity to do that is already with us, and so that could well be a way forward. But I did want to pick up on Nicolas' point, because I actually have some sympathy with what he's saying. I think when you're investing in an SME, in terms of the forward-looking aspects, what you're really investing in is a management team, a business model, an idea, an innovation.
For sure.
What do you need from financial statements? Well, I think you primarily need something that's got confirmatory value and something that is good for assessing stewardship, which I know is a very laden term, and I won't talk about it, but I agree that IFRS financial statements are not a prediction, but the primary objectives of those statements does remain there to have predictive value, usefulness in predicting future cash flows. But if that's kind of not what you're after from your financial statements of a quoted SME, then we might need to think again.
I think Valerie has been burning to answer. So from your practical perspective, what is your contribution to this discussion?
I understand that you are an investor, and of course your reaction is probably, I don't want that the company spends time and money, I don't see you, time and money with this type of business, IFRS. And here I have absolutely no link with EFRAG, I have no link with IFRS boards and so on. I'm not paid to promote IFRS. I'm sorry, not at all.
We can manage.
But Thank you. I would like to see you when I talk. But what I want to say is, when you invest, first of all, somebody has valued the company. So it's part of my job to value companies. And so I don't need full IFRS, but I need at least common rules to be able to value companies. Because sometimes it's crazy to value a small and medium-sized enterprise. I remember a file, it was on the free market. So you know this market probably for very small companies. And the company had two activities. One of the two activities represented 3% of the business and the rest 97%. And they made an arithmetic average of the ratio. So they took price earnings of the first activity, price of earnings of the second activity, and they made an average. I was in the room and I get nervous, huh? You can imagine. So I need at least rules, common rules to make my job, to make the valuation correctly, to help you as investors to take correct decision. Otherwise, you will invest during an IPO, for example, you will invest in a new company and you will have no idea about the rules used to value the company. So at least I need common rules.
Before we move on to headhunting and dating, I think I think there was another hand raised over there. Yes.
Yes.
Maybe two more hands, no? Here. One over there. Can we have a microphone here in the middle of the room? Thank you.
Yeah, Carsten again. Just a remark. I think, given that we have got Basel III for banks and we are just facing disintermediation, it's important also for small and medium enterprises to get figures out which are comparable, because banks tend to put together portfolios of credit which they then securitize. So if you want to get elected to be one of these portfolios and get also perhaps financing like crowdfinancing, you need to produce numbers which are comparable. And therefore, I think if you want or not, we have to get to something like common standards.
If you want access to the capital.
Yeah. And I think there was another hand in the light here that I almost can't see. Maybe two.
One over there as well.
Here? One here, Richard.
I'd just like to come back to Michel with a disagreement that we've had before, which is on the question of whether public accountability is the correct dividing line. I mean, I would suggest within public accountability there is a significantly wide range of companies, and that there are many small companies for whom, yes, basic IFRS are perfectly appropriate, but there's another vast amount of disclosure and further complexity in full IFRS which doesn't apply to that company and imposes significant costs on both the preparer and the auditor in applying those standards. And from a practical perspective, what's needed is some sort of cut down for smaller companies. Now, I appreciate that that's much easier said than done, but I would suggest that there's some research evidence that you can identify the companies that need full IFRS from whether they have an international range of shareholders and whether they have international activities. And at the other end of the scale, you have companies that have only national shareholders and only national activities, and they just don't need most of IFRS. I just take the opportunity. Look, give me a chance to finish, Philippe, before you disagree. I always come back to the law of diminishing returns and the Pareto principle as an application of that. That would suggest that you get 80% of the effects from 20% of the effort. And I think in accounting standards, for 80% of companies, you probably get all the information with 20% of IFRS, and you don't need the other 80% of the IFRS. And it would be interesting to see if one could pursue that a little bit and find some accommodation of that kind.
I think Michel is already prepared to respond, right?
Yes. Well, again, this is a technical discussion where a trustee should step in very prudently. But having in mind my experience as a securities regulator, and today I try to understand what Hans does, not always easy. I think we might take in consideration some of the elements you mentioned. I don't buy the idea that there is a difference between those companies that are nationally owned or internationally owned. What we see today, and we are trying to build a capital market union, is a system whereby we have a unified market where funds invest coming from different countries, by the way, not only European countries, but also countries from overseas, American countries, countries coming from Asia, and you can never tell whether a family company which is nationally family-owned today will not progressively transition towards a listing, or whether there will be opening to a private equity fund that would prepare listing in the future. So it's extremely difficult, to my point of view, to have an operational approach to this. Now, having said that, is it possible for the standard setter and also for the securities regulators to look into the content of the disclosure? Probably so. And I don't want to elaborate on this, but we know that this is one of the main issues the IASB is addressing today. How to deal with what they call the disclosure initiative. And it goes both ways, by the way. Are there things that we could simplify? Are there things that we could characterize according to the situations where the companies are? Are there things that we should clarify? Hans mentioned in the preceding panel the need to probably look into the contradiction between the accounting approach and the non-GAAP approach. This is something where we probably can make progress in the future. But again, my feeling is that the notion that is very palatable to many politicians, that there is a difference in kind between companies because of their size, to my view, is wrong fundamentally. And sometimes I have to say, and I will stop there, I tend to believe that accountants are in a way the scapegoats of different battles. In some cases, the battles are in relation to fiscal policy. If you change a standard, then you have a tax consequence or a fiscal consequence, and then you hesitate to do it. They are the scapegoat of the prudential approach. Sometimes you want to make a presentation that is more palatable to the prudential regulators. And I have to say, sometimes they are the scapegoat of the political debate, the need to please a huge community. 99% of the companies, from a political point of view. I think we have to resist this. I think we have to explain that this is not the right approach, really.
I hope the European Parliament listens to you, Michel. Thank you very much for this comment. I think Peter would like to make a very, very short comment, because we have to give back the floor to the room.
Short and precise.
Very good.
A number of years ago, the Stockholm Exchange did research, because for a number of years we had no addition at all of companies wanted to be listed. So they asked the investors, they asked the companies, what shall we do? And everybody came up with a brilliant solution: laxed regulation. Accounting, no quarterly reports, no corporate governance issues, no nothing. They scrapped the quarterly reports. 3 years later, it's record everywhere. Companies are jumping into the stock market. That has nothing to do with regulations. 3-4 years ago, the P ratios were 11-12. Now today they are like 18 to 25. You get better paid, so you list your company. I think it's necessary to understand when you list a company, it's something completely different than if you talk to one investor or a bank. You talk to the public. And the public is something completely different than one professional investor or a bank. And I think that requires actually IFRS when you go to the public.
Yeah, public listing, very important point. I think, Richard, you already have the microphone. Fantastic.
Martin from the ACCA. It's really following on, and so maybe we've covered it enough. But you raised the question of harmonisation across Europe, and I guess to justify harmonisation, we would have to see the extent that this information is required across Europe. And so, are we gathering information about in this unregulated market sector about cross-border investment and activity? Because I think that would be the justification for more harmonisation. Otherwise, I think we head down Roger's road of allowing IFRS in the unregulated markets, and but perhaps not requiring it.
Thank you. Well, I was going to come back to this question anyway, actually, but I suppose there is a distinction that you need to make regarding harmonization, which is harmonization from a regulatory perspective, from a policy-making perspective, and also harmonization from a user's perspective. I think that's quite a different debate in reality. So I understand, Roger, that earlier in your comments you made the point that maybe harmonization is not entirely necessary, but the use of IFRS should be allowed. And I think Michel, conversely, if I understand you properly, made a very big and convincing case for harmonization and use of IFRS all around the board, on the assumption that it can be used in a proportional manner. So, and I think you were even included non-listed entities in the perspective of their future listing. So can we maybe have a round of comments from the panel members on this issue of, well, do we need harmonization and to what extent, especially maybe on non-regulated markets, from a user's perspective, not from a policy-making perspective, which is about how realistic is it for our policymakers. I will start with you, Peter.
I think one simple answer is, well, if you require the company to present the annual report in English, that is one harmonization that the user wants. Because if I go to a German company or even, let alone a French company, try to understand it in the local language is almost impossible. So unless you have the annual report and the quarter report in English, I really don't need harmonization because I will not invest in a company that I cannot understand from that perspective. But harmonization to me is IFRS. The rest is local GAAP.
So accounting is not only the lingua franca of business, it's also English, right?
It's definitely English.
Point taken. Very good. Roger, do you have a comment on the use of English?
I'm not going to comment on the use of English.
Really?
No. But I will comment on other aspects. So it's attractive to think IFRS SMEs as a solution rather than full IFRS, because normally you end up with the same measurement. So the disclosures tend to be simpler, but normally you get the same answer from measurement, and that's probably the most important thing to users. But actually in the UK, we use IFRS for SMEs as the basis for UK GAAP, and we made over 1,000 changes to it in implementing it. This IFRS for SMEs is really addressed at developing countries, small countries in developing countries, and it's probably too simple to use for the average company which might be looking for public money in Europe. So I do think, and this is what users tell us, we should look at full IFRS. But the other thing I wanted to say is, well, two other things actually. First of all, is there any way of trying to simplify disclosures for small listed companies? And I know that the ISB are looking at this. A lot of the complexity isn't necessarily in the measurement, which comes out of the books anyway, but it's things like financial instrument disclosures for a very small number of financial instruments, pension disclosures, perhaps for 1 or 2 employees. And I think there's got to be some way of simplifying disclosures for very small public companies. And the other thing I wanted to say is I don't think that standard setters are the only people in this chain. It's also, I think, regulators need to be closely involved in this, and auditors, because both of those can actually get small companies to be producing quite complex disclosures which aren't actually material for them or particularly valued by users. So my view is we should be going for full IFRS. I would make it discretionary rather than absolute for non-listed companies, but I do think other people have a role to play as well.
Thank you very much, Roger. Very pragmatic. Any other comments from the panel on? Yes, Michel.
No, just a remark, because I've been, of course, a passionate defender of IFRS, but I'm absolutely conscious of the difficulty, of the need to find transitions, of the possibility for national standards to converge progressively. So let's be pragmatic. I think that what we need to do is, for us, the IFRS Foundation, to work with EU authorities and stakeholders to give a direction to the policy that is consistent with the Capital Market Union. So we are not going to sort it out tomorrow, clearly, but we need to have a vision, and we need to implement it reasonably, progressively, in a diplomatic way with all the stakeholders, really. And the IFRS Foundation is ready to participate.
I have 2 requests, 3, 4, 5. That's going to be impossible. I have 2 very eloquent French gentlemen who want to ask a question, which I hope will be in English. Yes?
Swedish, maybe?
English,
No,
give it a try. Okay, so Patrick de Cambourg speaking Swedish. That's taped, so that's on the record. Go ahead, Patrick.
No, just one question. We've been discussing harmonization, but I've not heard what you think about the accounting directive in Europe. Because I think, I'm sorry to say it, I think we need to discuss that point. Because one option is to go further in terms of harmonization via directives also. We have, all of us have made tremendous efforts to transpose directives. So we have created a level of harmonization, a certain level of level playing field. So is there a need to go further? And if yes, why not through that channel? I would love to have Eric's reaction to that as well.
Anyway, come and join the panel here.
You have 1 minute to think about it, Eric. I think that's exactly the distinction I was making between harmonization from a user's perspective and harmonization from lawmakers. And obviously with a directive with, I think, 100 options or something, I think that's a very odd way of harmonizing personally.
Well, I'm not a panelist, but I don't share that view.
Okay. I have one question here. Eric, do you want to react to that?
Just to say that it's a question which comes a bit early. This is something where we have to reflect on, but it's not on our agenda at this very moment. We are talking under the Capital Market Union with ISB to look into various options, and that is as far as we are on this. And we have not even considered to launch a harmonization exercise to amend the accounting directive in this respect for the time being. We are looking at other markets.
And today we're talking about listed SMEs. I think that's going to be the last question. Peter Chris.
Peter Chris, Federation of European Accountants. Thank you, Patrick, for this question. And I would like to raise one issue. Roger mentioned at the beginning that we should at least allow IFRS to be used. And in reality, we have in Europe even listed companies on regulated markets, which are not obliged to produce IFRS financial statements because they are not in a group. Is there a way to sort this out in the existing political reality here?
Yeah, go
I've always found it kind of anomalous that standalone entities, there are a lot in the UK, investment companies, because they don't have subsidiaries, therefore don't follow IFRS. I think it's probably more of a matter of convenience in staying away from implications on tax and distributions than a matter of principle. So if there was a way of achieving the information benefits and somehow neutralising the implications for tax and distributions as a personal view, I'd be all for it.
Roger, on that point?
I agree.
Okay, that was a very short answer. Thank you. We talked about the directive. We talked about harmonization. Maybe as a final question for our panelists, well, is there an alternative, actually? Is there anything that we could use in Europe for, the accounting of listed entities, listed SMEs? Is there an alternative to IFRS, or is IFRS the only game in town? We start from this end, and we will leave the final word to the lady of the panel. Peter.
Well, the shortest answer so far, no.
Thank you.
I talked about about all the changes we had to make to IFRS for SMEs, which is the only other thing I could contemplate. But that was the UK deciding to make 1,000 changes. If you asked every country in Europe which 1,000 changes they make, I think we would be here for quite a while before we agreed on a new adjusted IFRS for me. So my answer would be the same. It would just be IFRS.
Andrew.
For the non-regulated markets, having not done a comprehensive cost-benefit analysis of moving to full IFRS, no more than my personal gut feel is that it would fail a cost-benefit test, just a gut feeling. There is no obvious alternative, but I don't think it would be all that difficult to create an alternative.
Right. Thank you. Yes, Michel, I think I can guess your answer.
You think so? I guess the alternative would be not to build the capital market union.
Is it your answer?
Not all or nothing.
For your final word?
Valérie, you have a final word.
I share Andrew's view. It depends if it's we are talking about regulated markets or non-regulated markets, and of course we don't have a cost-benefit analysis on this type of topic, so I cannot give you more information.
I think there was a prime minister in a European country that repeatedly said there is no alternative. So I think we're getting pretty close to that. Can we actually ask the polling question again to the audience and see whether the voting has changed? Françoise, you can use my voting machine as well if you want. So we'll have a double vote. So we have a question. Should smaller listed companies apply simplified financial reporting standards compared to larger ones? Press 1 or A if you think the answer is yes. Press 2 or B if you think the answer is no. And the answer is? Have you voted? I think, panel, you've done a great job, actually. We've made progress. So a big clap, I think, for the panel and a big thank you. Thank you very much.